Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Thursday, August 2nd, 2007. The market's closed. S&P 500 finished with a gain of about $1, a little more than $1 here. And you can see that the 200-day moving average seems to be perhaps a little bit of support for now at least. Also, that's where we have the location of this trend line that from the March 2006 lows. And as John from Apex Trader pointed out to me yesterday, it's also the location of the approximate two-thirds retracement of the move from the March lows to the recent highs. Now, when you look at Fibonacci, it looks all nice and pat in hindsight, just like a lot of technical analysis does, like moving averages or oscillators, that sort of thing. But the point to looking at Fibonacci is, if a lot of people are looking at it, it tends to be a self-fulfilling prophecy. And if we can find, that two-thirds retracement area in the same location approximately as a 200-day moving average and a multi-year trend line, we're going to have a lot of people coming to the same decision, that is to stop selling at that area, which obviously reduces supply, or to potentially put some bids in there, which increases demand, and we start to see the market stabilize there, which is what we have right now. We have some stability, but and we're starting to see buyers gain control a little bit, but still on this daily time frame, I'm going to remain highly suspicious of any rally that continues to materialize from here, because now we've got a declining 10, 20, and 50-day moving average with the 10 below the 20 and the 20 below the 50 as well. We might want to look at Fibonacci off of this move, which would be a third retracement. 38.2% would be up to about 148.5, where we had prior support, and a 50% retracement would bring us up to 150, which is a very nice trade from here. But in that area, we might start to think that's where we might find a little bit of resistance. Let's wait and see for more evidence to develop here. Yesterday I pointed out the moving average convergence divergence oscillator here on the hourly time frame, and that seems to a lot of times signal at least a short-term turnaround. So looks like that's what we're getting now. You can see this 5-day moving average is starting to flatten out a little bit. Let's look at the 10-minute time frame, see that a little bit more clearly. And the market was doing battle with that all day long. You can see though that we did have a couple of higher lows. The sellers tried to gain control in here, but yesterday afternoon's highs did act as support, and at the end of the day the buyers came in and were able to push this market at least a little bit higher. It's still not really convincing. I think that this 146 probably area is going to be an important level over the next couple days as far as a support area, and then 149 to that 50% retracement level of 150 seems like that might be a logical place for this market to potentially return to on the upside. And then we'll look to see, we're not going to sell short up there, but we want to look for evidence of what the market's doing and listen to the message of the market rather than impose our belief upon it. The semiconductors, let's throw Fibonacci on all these markets. The semiconductors, from this low, they retraced two-thirds of that move as well. From the April low, it looks like about 50%. So what we can do is get what people call a confluence of these Fibonacci. So we can see that two-thirds retracement from the let's start that over again. Two-thirds retracement or 50% retracement of the big move, and then let's throw a different color in here. That's quick, and I couldn't do it. 50. Anyways, from this one we had also a 61.8% retracement. So two-thirds of this move right here, and 50% of this move right here. So you can see that the market is finding some support also at that 50-day moving average and this prior level of resistance. So it looks like for now maybe the worst is over for the semiconductors, but we've got all these moving averages telling us that we've still got to be very careful here. Now looking at a 10-minute time frame, we can look at this downtrend line that was broken just in the last 20 minutes or so of the day, and that also brought it back up above that 5-day moving average. Now once again, I'd still like to see hopefully maybe a little bit of a pullback towards 37.80, and then perhaps we buy the strength above $38 a share. Above $38 a share, looks like this market might run up towards about 38.50, only for aggressive traders here obviously, because we're not talking about big potential moves. If we look at Fibonacci on here, Maybe a 50% retracement brings us up to 39.25. Bottom line is there's still a lot of risk in this market. We're looking, we're looking for support in here. There's a couple reasons to think so with this moving average convergence divergence oscillator showing its divergence, and it back above the trend line, back above the 5-day moving average. 5-day moving average starting to show signs of flattening out a little bit as well. And then of course we've got the Russell 2000, which is also showing some signs of stability, however at much lower levels, even below the 200-day moving average. That 200-day moving average is probably going to be a pretty good upside target for a lot of people who might want to lighten their exposure to these stocks if it is to get back up there, maybe even go a little bit above it, 80.5, 81. Let's take a look at the 30-minute time frame. You can see here, well, let's take a look rather at the hourly time frame, because again, I want to point out the follow-through from that moving average convergence divergence divergence, the MACD divergence that I had pointed out yesterday. And today we saw that strength. We saw that yesterday's resistance, just like the S&P, did act as support in here today. So we've got, looks like a little bit of support. Let's call it right here at about 77.20, and a little bit of resistance up at just 78.25 or so. Again, this market is severely hurt. It's due for a bounce, and it's going to be a bounce and a downtrend. So if you're playing this, be careful about your position size, because news and surprises tend to follow the direction of the trend, and the trend in this market is down. So we have to be very careful in here. The Nasdaq 100. Let's put the Fibonacci's on here. Now from this low back in March, we've only retraced a third of that movement so far. And today we recaptured that 50-day moving average. So the 50-day moving average is still advancing, but we do have the 10 crossing down through the 20, which is officially, in my mind, a sign of distribution. So it says we just want to be, continue to be careful in here on this market. When we look at the hourly time frame, again, we didn't see that same divergence that we saw in the other markets. So you don't need a divergence for a turnaround, but a lot of times that's a good clue. Looking at the trend line, you can see here that the market today, as I pointed out intraday on the blog, was that this market has been doing battle first with that 5-day moving average in here. That was really acting as resistance for a good portion of the afternoon as the market was really kind of quiet. Then late in the day, same thing. We got a push above that 5-day moving average, and now also above this downtrend line. So the buyers are slowly gaining control, and we can kind of look at this move below the, let's say, important support is probably 47.80. Moving back below 47.80, I would think we're having problems. But these people who sold short yesterday are feeling pretty bad about those sales, and perhaps this is going to turn out to be a little bit of a bear trap in here, and we can squeeze those guys higher as the participants start to realize that maybe the worst is behind us, for now at least. So still a lot of mixed signals, but the buyers are slowly taking control here. Continue to trade conservatively in this market because there still remains a lot of risk.